Y'all, you're working hard, you're closing deals, but somehow your bank account isn't showing it. God knows I know how that feels. Let's talk about the money traps that quietly eat new agents' income. Maybe it's for experienced agents too, to be honest with you. By the end of this episode, you'll see the 3 biggest money traps clearly. You'll know exactly what steps to take to protect your income. So here's the problem. Many new agents believe if I just close more deals, the money will follow. Like, that's a really good thought, right? But the real issue is, guys, there's a lot of fees and unnecessary expenses, and you have a lot of poor planning that are quietly draining your account. For instance, how many Apple Store account charges do you get per month? You probably don't know, but it's probably a lot. I'm speaking from personal experience here. So the issue isn't your effort or your skill. It's that you don't see the traps clearly enough. But once you recognize these hidden pitfalls, guys, you'll stop leaking money and you'll start controlling your income. And avoiding these traps becomes straightforward once you know what to look for. Here's money trap number 1, not knowing your real per deal take home. Guys, you close deals and you see $9,000 in commission, but what actually hits your bank account might be closer to $4,500 to $6,000, depending on what your splits are. And that's before taxes. This creates a false sense of income. You start spending based on your gross and not your net. We love as an industry to think about gross. We love to say we're making so much money, but guys, that's not what's on our tax returns, right? So listen, here's what we need to do. You're making financial decisions based on money you actually never get to keep. And guys, this leads to overspending, leads to you not having savings, and it gives you that financial stress that affects everything in your life. So here's a practical solution. Create a per deal reality sheet. And I would do this immediately. It's going to be simple. You can use a spreadsheet. If you're paper and pen, cool. Make some columns on a piece of paper. But here are the columns I want you to do. Gross commission, commission earned, your brokerage split, any fees your broker charges, transaction, desk, that kind of stuff. If there's referral fees in the next column, so we're on column number 4. So if you had to pay a company Relo, or if you're on Zillow, Flex, something like that. And then if there's transaction fees based with that, and your marketing expenses. The last one is going to be your taxes. So your taxes are going to be, I would estimate 25 to 35%. I say 30% in my personal opinion. I'm not a financial advisor. 30% will probably be okay for you, but always go get that checked out with somebody that's smarter than me when it comes to it. And then I want you to look at your actual take-home pay in that final column. So again, here are the columns, right? I want you to look at gross commission, then broker split, brokerage fees, referral fees, transaction fees, marketing expenses, and then good old Uncle Sam at the end, followed by your actual net. So if you can do those columns, you'll get a clear example of what's going on. And it's going to look something like this. $9,000 commission, minus $2,700 for your split, minus $300 in fees, minus $2,000 in taxes. So your real income is $4,000, not $9,000. Big difference there. The next step is to calculate your last 3 deals. So use that same formula, go get your last 3 deals and find your real average take home. If you don't have 3 deals yet, just use the standard average sales price in your market and you can get pretty close to that. When you figure this actual number out, this becomes your true income number. Money trap number 2 that I see a lot of agents doing is they're spending money before they're consistent. They're going out spending money because they got one big check and they're doing it to make themselves look successful before they're even consistent. We got to get consistent income before we start having superfluous income, right? An example of this is like buying leads too early, expensive CRM systems that you don't actually need or going to use, coaching programs that are overhyped. Maybe you're trying to get your own branding, logo, and photo shoots. Guys, that's cool. Let's make some money first. And of course, we always get those fancy marketing videos and stuff that we don't really need yet. And the reason this is dangerous is because your business becomes dependent on your expenses before it actually has the income to support it. You should be making money, and then your expenses, obviously, you can spend that on whatever you got left over, not spending the money and taking home what's left over. Great book called Profit First for real estate agents. I'm going to check that one out. If you do this, this creates high stress, low cash reserves, and constant financial pressure, that dreaded financial pressure that makes us all do crazy stuff. So here's what I would say is a practical solution to this. And I would follow the 30% rule. Until you have 6 months of consistent closings, never spend more than 30% of your last commission on business expenses. So let me say it again. Until you have 6 months of consistent closings, never spend more than 30% of your last commission check on business expenses. And that would look something like this. Your last deal net income was $4,000. Your max spending allowed would be $1,200. So that's 30% of 4,000, right? It's not 3,000 and it's definitely not 5,000. Make sure that we're staying in bounds with our business spending. If you really want to drive this home, look at your last commission check and calculate that 30%. That's your max spending limit. Everything else stays in your account. So here's money trap number 3. Most agents don't know what their bare bones survival number is. So let that sink in for a second. You don't know what you're spending on marketing and advertising, what actual deal number is going to be. You also don't know what it's going to take to keep the lights on, the food in the fridge, and, the car running. You don't know what your minimum number is. So how do you know if you're making money or not in an actual business? Because what happens is you overspend during the good months because you have huge checks. You're like, I'm finally going to go buy that watch I wanted. But then you're going to have slow months because you're not consistent yet, and you're going to panic. And this creates that dreaded income instability we've talked about, and it makes you crazy and affects your relationships. Here's a practical solution. Calculate your survival number today. This is your minimum monthly costs to stay in business and stay alive. And here's how you're going to do it. You're going to add up your rents or mortgage, food, car, insurance. Literally take your bank statement, go through and highlight or circle the ones that you know you have to pay. You're obligated to pay to keep your quality of life. It might not be eating out at a fancy restaurant this month like you did last month. It may not be vacations. That's not your survival number. That's your good living number. Get to your survival number and add it up. Then you need to figure out your business expenses, not your transaction expenses, your business expenses, your brokerage fees, if there's like desk fees and stuff like that, MLS fees, your marketing, your gas, things like that. And what that'll do is that's going to give you your total survival number. That's going to give you your business and your personal. So you may have, a survival number of 3,000 for your personal, and your business expenses may add up to 1,000. So your $4,000 now becomes your survival number. And now we can convert that to deals. If your average take home per deal is 4,000, guys, it's easy math. You need one deal per month to survive. That's survive. That's not thrive. So now that you have clarity, let's talk about the next steps. Write down your personal survival number, and now this becomes your target. And if you really want to take this a step further, which I highly recommend, you need to open up an LLC, then open up an EIN, then open up your bank accounts for a business, right? But I want you to open up 3. And what this does is this helps, fix some of your money problems because you can visually see how money changes hands. Your first account is going to be your income account or your accounts receivable, where all commissions go. That's really your business income account. Your second account, you're going to label it tax, and you're going to move 30%. So check goes into business account number 1. Take 30%, move it over to tax account immediately. It's not your money anymore. It's Uncle Sam's that you get to hold for him. Account number 3 is your personal account. And what you do with that is that's where you put your minimal survival number. So you get a $5,000 check, you put 30% into taxes, and then you move over your minimum survival number if you have it. And that way you clearly see the distinction between personal numbers and your business numbers. And this prevents accidental spending of tax money or overspending or cash flow confusion. Because if you're like me, you're like, check my bank account, I got money in there, not realizing I've got 10 outstanding checks that haven't been cashed yet, right? This weekly financial control systems. And the last thing you need to do is have a weekly financial control checkup. I like to do this on Sundays, but you just need to go back into your accounts and review your income, review your expenses for the week, and review your pipeline. This takes about 10 minutes, but it prevents months of financial damage. So the reality is new agents fail not because they don't make money. It's because they don't keep enough of the money they make. They're spending it before they get it. So here's what I want you to do. Today, calculate your real take-home per deal. Find out your survival number. Set your 30% spending limit to protect your cash. Then go open up your separate bank accounts, so that way now your money has a structure, and then go back and cut any unnecessary expenses that are quietly draining your future. And those are things that you look back on the deals that you have gotten, and you can see this program, this product has not led to any deals I've done. I don't need it because I'm doing just fine without it. This simple move will give you control, it gives you clarity, and that stability. So, in the next episode, we're going to go even deeper. We're going to go over the silent budgets that are draining real estate agents' incomes. And it's going to show you exactly where your money is disappearing and how to finally take control of it so your business can start paying you back.